Afternoon, how are we all doing? Afternoon, John, Peter, Monkey, Amy, Ian, Fletch, Sam. Very informative and great channel. Thank you very much. Kennelly, JC, Jimmy, how are we all doing? Just a quick update. We've obviously just had that news come out on the CPI. Nothing much happened on it, to be honest. If you look at it, it's not really much of a move. What we've actually got... Where the hell's my pen? Way down there. What we've actually got is a same as previous result for the year-on-year CPI. Core as expected, which is the same as last month. And the standard CPI has dropped by 0.2. So it's actually overall... It's a 0.2 drop in CPI month on month. That's all it is. So it's slightly bearish US, but not really anything. It's just a kind of meh, not a lot. So I was hoping we were going to get this lower figure on the year on year and the core being a little bit down, but we didn't. So nothing really to report there. Unemployment claims came out exactly the same as before. So literally month on month, nothing's changed in the US, basically, is the upshot of that news. Because of that news, stagnation basically in inflation, there's a slight higher chance of a Fed rate hike by the end of the year. It's always been a bit of a 50-50, but so not really anything there that gives us any indication of bullishness or bearishness from a US perspective. We are having a rally on the US at the moment, but that doesn't mean it's going to stay there. Other than that news this morning, there really wasn't anything. We had a little bit of ECB news. Israeli attack targets Damascus and Aleppo airports. Bit of news out of OPEC, but just demand news for all positive, which is good. But that's it, really. Nothing much else this morning. So yeah, bit of a flat morning, apart from obviously the CPI spike that we've just had. So we'll have a look at all that in a minute. Afternoon, everybody else that's just come in. Hamza, Jimmy, Emac, XRUpdate.news, Danny, Marco, Itchy Nose. So banking wise, I've just banked one oil. I put in Telegram that I was going to put a trading stop on this oil position. So the initial oil position I took was on the gap up. I put a second position on the gap fill down, and that one basically rallied up for a good 6 or 7 hours today, straight into resistance, where I was anticipating possibly a little bit of bearishness. And obviously, if that US dollar news had come out differently, we could have had a drop on oil. So I decided to get out with a trailer on that and just bank that 0.5%. I've got New Zealand dollar Swiss, which I'm also going to bank. I'm not going to add that back on. I will do, actually. If oil drops all the way back down here, I will add this position back on and then bank it again. But I think what we'll probably find here is a little bit of this and then a fly on oil. We've got the oil inventories coming out at 4 o'clock this afternoon. So we might get some downward movement or upward movement off of the oil inventories. If it goes up, fine. It's going to bring me back into profit on that position. If it drops down, it gives me opportunity to get a second on again. So I'll wait and see what happens with the oil inventories later. New Zealand dollar Swiss in profit. This is so close to my TP. My TP is at the top of this propulsion gap. It could go further. Obviously, we could fill this propulsion gap and test this resistance, or we could come down and fill the whole propulsion gap. But this is a lovely big 2-day drop. It's stupid not to take advantage of it. So I'm going to stick a trail on this really nice and tight. So I'm going to put sort of 64, 65 pip trailer on it. And get out of that. Just as and when. So it's either going to continue to push down, and in which case it will hit my target, or it will pull up and try and come back into propulsion, in which case I don't want to be in that move. I want to be out. So just going to bank that one as well. So that's going to bank about another 0.3 today, somewhere in there, another 0.25% or something like that. So should bank about $700 odd on that. The main movers obviously have been the US dollar. So pound US dollar, big drop on that. This is continuing at the moment. US dollar Swiss, big rally. US dollar CAD, nothing much because the Canadian dollar moves with the US and the Canadian dollar has been rallying on oil. US dollar yen is pushing up. This is the key one. So watch this level. We got a zone coming up here with that high and that previous low that potentially is going to act as a little bit of resistance in this range. If they manage to rally this US dollar strongly today, I don't think they'll be able to, but we'll see what happens. We're going to be coming back up to that dreaded 150 intervention level. So we'll see what happens on that. But holding that one, pound US dollar, I mean, obviously, that's just pulling back at the moment. We've got some propulsion gap tests to do on this leg up, so that's okay. Everything else is just sitting there. So waiting on the rest. ADRs, we've only got the one, New Zealand dollar CAD. That's pushed down into ADR. New Zealand dollar's had a lovely drop today. So across the board, New Zealand dollar coming down hard. Aussie dollar doing the same thing. Aussie dollar and New Zealand dollar tend to move together. So those are both coming down very hard today. You can tell which one's winning because if you look at Aussie, New Zealand, neither of them are really going anywhere. But so that's the only ADR you've got, New Zealand dollar CAD. So there's a potential mean reversion opportunity there. That would need oil to drop a little bit, but yeah, could take a long on that one. It's not a great level, I don't think. It's not bad, actually. It's a propulsion gap. So it's a bit of an odd propulsion gap, though. It's part of a V shape. So might find some buyers in it, but just a weird move, that, and it's just looks weird. But get in if you fancy it. Long, you've had a 5-minute reversal alert. Actually, no, you haven't yet. It's going to trigger in a minute. So there's your reverse alert. Nice wick rejection off of ADR. But that's it. We've had one weekly hit, which is US dollar Swiss. We looked at this one this morning, and that's playing out nicely. So if you got into that from the high on Monday, that was a nice reversal. But it was a propulsion gap fill as well off of this support, which I put in. So yeah, looks pretty good for a bounce. It's going to need some strong continuation move on this US dollar. And as I said, this news isn't great for the US. It looks green. It's deceiving. It's like, oh, look, it's all green news. No, it's not. What they're saying is basically inflation hasn't changed. Oops, we were expecting it to come down. We've had no progress. Month on month, it's dropped 0.2. Not a lot, is it? But it's dropped, which is negative for the US. So it's not, although it looks positive because it's 0.1 above the forecast. The forecast was to drop by 0.3, and we didn't quite do that. So it's nothing really, is it? So, so there you go. RSIs, there's a couple to look at. We'll have a look at those in a second. We'll have a look at the indices first. Now, the indices are going to be tricky this afternoon. We've got 20 seconds to the open. I am going to trade them. Because normally after a big news spike like this, you would expect there to be a little bit less volatility in the market. We still seem to be moving off the back of this news move at the moment. So I think when the volume comes in with the open, we might get some decent moves. These pre-market ranges, however, are all too small today to take. So I'm not taking any pre-markets. They're less than 10%. Of ADR. So I'll take 5-minute range breaks. But if you look at all of these, obviously we've got this big leg down, which is caused by the US dollar strength. Obviously the market moves in the opposite direction to the US dollar. So US dollar up, index down. I think this US dollar move could well get undone this afternoon. So potentially we could have a little bit of a rally on all of these. So DAX this morning, for those that weren't in the live room, it was an absolute slug. We sat here for an hour and I just got fed up and went not interested anymore. So got bored, basically. That was your pre-market range. The 5-minute candle was there. Then we had 15 minutes worth of inside bars. We finally broke that low by about 5 pips. Then it decided to put in a little bit of a rally and sat there for 25 minutes. So I just said, screw it, I'm out. I was waiting for the gap fill, and it just wasn't worth the hassle. Actually turned out to be the exactly perfect exit, because as soon as I got out of that second position, we came straight back up. So banked 650 this morning, but as you can see, went nowhere. This is what I was anticipating. If you were in the live room this morning, I said if we get that gap fill done, the most likely move is to pull back up into rotation today. And that's exactly what we did. It's just we didn't get the gap fill, but they did it on the news. So, so from all the indices today, they could go absolutely anywhere. It's all going to depend on whether this US continues to rally. The NASDAQ's, the Dow's dropping nicely. S&P's challenging the pre-market lows, and the NASDAQ's not really doing anything at the minute. But let's just quickly, ADR on Euro US dollar. I was just going to say, let's just quickly see what the Euro US dollar is doing. Good timing, dashboard. So Euro US dollar still rallying down. So we are still getting some continuation strength on the US. So they're pushing this US dollar even further. But as I said, in the next couple of hours, we could be back up there. So don't take this as this is US dollar strength necessarily. This could all reverse from here. Nice tight reversal alert you're going to get on that Euro US as well. Yeah, so we're continuing that move at the moment. We'll see where we go. So we'll wait for these 5-minute candles to go in. That's going to be too big to trade. I'm not going to get into that today. Max range 869. Yeah, I will do, actually. We'll wait and see what's going on with these. So just looking at where we're going, obviously it's going to depend on the US dollar movement. So with all of the indices at the moment, there's no upside risk. So if you look at all of them, there isn't anything really resistance-wise. Probably better to look actually on the other charts. So look at the hourlies. So if we look at the Dow, we're up at that high. We've broken out of that high. So the next resistance to the upside, this is just a multi-day kind of dropping accumulation. So the next resistance is up at 150. So if we do break to the upside today, it's the pre-market, and then you've got an absolute flyer. Downside, we'll be looking at yesterday's low and previous day's low. So that's roughly ADR to the downside. So there's loads of room to the downside, loads of room to the upside. S&P, same thing. We've got this area here, which is about 3/4 of an ADR. Downside is going to be yesterday's low and the previous day's low. And on the NASDAQ, we are moving up a little bit higher. So we've got previous day's low and yesterday's low, both within ADR. So those are your obvious areas you're going to find limit orders triggering. Upside, we've broken that high, which is a previous support turned resistance. So somewhere up at these highs, basically ADR. So we're looking basically on everything today. We're looking for either ADR hits to the upside or pretty much ADR hits to the downside on everything. There's room, plenty of room to move in either direction. So 5-minute candle's just about to close. So we'll see what happens with these. Afternoon, Sarah, Marco, Danny. Can't remember where I got to in the hellos. When does the 1-minute joke telling start? I missed it this morning, but watched it during my break. Yeah. We had the joke session this morning because the market was that boring. And they were very bad. So, yeah. Outro's back, so they may well come out in a minute. That's too small again. So not trading the NASDAQ. Pre-market range was too tight. That's too tight. It's too small, this range. Market hasn't gone anywhere. So if we get a lot of volatility, we could get whipsawed out on that one. Looking like a break short on the Dow. Why is my offset so close? Oh, my offsets are literally right on top of. I've been fiddling, haven't I? Just moving those down a little bit. So yeah, we'll see where we go on these. NASDAQ's trying to break back up to the upside. Afternoon outro. Afternoon, I assume that person in Russian who I can't understand, who somebody translated for me this morning. I assume you're saying hello. Could be saying anything. Waiting for US dollar yen shorts. Yep, hopefully. Afternoon, Brian. Could you please explain the reasoning behind why it should reverse? Yeah. 1 second. Afternoon, Marion. Gold. Also 20-second ad. Really? 20 seconds? Not get an ad blocker. Afternoon, Day Trader FX. So the reasoning behind the reversal is that news is not bullish US dollar, basically. So don't know if you were in here this morning, Daniel, but basically, so I'm just watching this Dow, short on the Dow. Oh, that's a nice bit of slippage there. Thank you for that. So short Dow, not short anything else though. So basically, when you have news coming up, what you tend to do is you get the market not want to put any money in to any big moves. So there's multiple desks in banks. You've got the commercial desks, the speculative desks, the market making desks. They're all basically got different jobs to perform. The speculative desk and the market making, well, the market making desk operates all the time. The speculative desk is their job is to make money. So the commercial desk's job is to execute orders on behalf of their clients. Some of those orders will be price sensitive, others won't. So some of them will be like, just convert this 25 million. I don't care what rate you get. I just need it turned from US dollar to yen, please. And they'll just go and they'll bank it. Others will be price dependent. They will say, we need a price between X and Y. Can you execute all orders in that range? So they'll move the market to that range, execute the orders, etc. So with news events, what you tend to get the morning before a large news event is a sideways movement. And basically, this is because the market doesn't want to put a lot of orders into the market, basically, because there's a chance that it would move highly quickly in one direction or the other if the fundamentals change, right? So if they need to achieve a price and they can't achieve it before there, what they will do is they will execute the orders after the news. So you get a news spike. Now, if that news spike goes in the opposite direction to what the fundamentals point at, it's quite often just order execution, and they are just basically getting everything they need done and off their desks. When they've finished, there's no reason for the price to continue that way because the fundamentals are pointing back the other way. Yeah. So this is why you'll often find on a news event, the market will go, hey, look, it's brilliant news. And then the market drops and you're like, why is that dropped? It's good news. It's just because it's not good enough news for them to shift direction and shift fundamentals. So what they do is they just execute everything they need to do. And that happens to be, there's more bearish movement than there is bullish because all the banks are doing this at the same time. So when you get a move that goes against the fundamentals, quite often they will undo that move either in the same day or within a couple of days, which is what we call an A-shape or a V-shape recovery. Yeah. So basically the move is false, like this one. Yeah. And they go, and they undo it. Yeah. So it's basically, it's just being moved because they need to move it for a commercial reason, but it's not the way that they would expect the currency typically to go. So when you look at things today, like the US dollar, where we've had this big move to the upside on news, which isn't particularly bullish. It is bullish, but it's not really bullish. It's a big move for a very small bullish news event. You look at these moves and go, all right, there's one there. And this is a perfect example. Look. What news was this? 6th. So that was unemployment rate, yeah? So the unemployment rate came out as a negative, right? So that means it's bearish for the US dollar. Because the unemployment went up, that's bearish for the US dollar, right? So what happened? The US dollar spiked, and everyone's going, and you, if you're in the live room on that day, you'd have heard me saying that's not going to happen, that's not going to hold. And it just immediately reverses itself because it's not the right thing to do. Unemployment's gone up. That's bad. We can't input our interest rates up anymore, which is negative for the currency. You can't spike and take off in that direction because there's bad news for the fundamentals. It comes the other way. So that's potentially what's happening here. It may not. It may be a case of it's not enough to make them reverse it. It's not enough to make them push it. It might be just that they want to start a pullback and take a bit of profit on a move. You never know. But it's not really something I would say is a long-term move because it's against the fundamentals. So, however, the US did come out and say, well, not the US, but that hike is now, excuse me, a little bit more likely, which is bullish for the US. So there's a bit of bullishness in today's news, but not masses. So you would be able to tell if that was a big fundamental shift, we wouldn't be sitting here talking about this. We would be going, holy crap, we're sitting at 175 ADR. Yeah. If it's a proper big move, we'd be up here somewhere on the news. It's not. It's just a knee-jerk reaction, and these knee-jerk reactions are quite often undone within hours. So we'll see, though. This is it's fairly strong at the moment, which is good if you're going short on the indices, because as I am, that's the move we would expect to achieve off of a bullish US move. So we'll see if we can last it. If basically now I want this move to last for half an hour or so I can get to target and then reverse once I'm out. Perfect scenario. Dow's struggling to get out the lows here. Dow looks like it's frozen. It hasn't, but it looks like it has. We're not getting any movement. We've got some ADR alerts going off. New Zealand dollar, US dollar, Aussie dollar, US dollar, all the US dollars basically. We're going to get ADR hits on all these today. Yeah. So again, up to you what you do with these ADR reversals. If all of these CPI figures had come out higher than expected and higher than previous, I would be saying don't touch these with a barge pole. They haven't. They've come out the same as they were before, which isn't good news. So potential reversals on all these. So drop down M5. You're not going to get a reversal on some of these very easily when that chart updates. Price it's not down there because these are big fast moves. Wait for that to update. So we'll see what happens. But Dow's off out to the lows. So let's just have a quick look at where we're going on this. So my target is 2R initially. Again, as I said in the video, if you've watched this stock index hedge EA video and strategy, there's no point in having your target there when you've got a blatantly obvious resistance or support coming. Yeah, so I'm just moving target up a little bit because if we're going to go to the downside, I would expect limit orders to trigger off of yesterday's lows. They usually do. In which case, I don't want my target there because if it's going to trigger a bounce play there, I'm not going to get hit. I am going to get hit there, though. So just moving target up ever so slightly on the Dow. And S&P, miles within target. So that's yesterday's low. Potentially that might be a bounce point here. So that previous support. Let's see that, can you? Yeah, so we've got this area here. So that is a previous support. We broke it, turned into resistance, slammed through. So as we're coming down, potentially this area here, where this propulsion gap is going to form some kind of buy area because that's what happened yesterday. So that target's easily achievable. If it flushes, obviously, which we don't know yet. Afternoon, Virginia. Just back from the dentist. Ow. Haven't got the dentist for a while, thankfully. Anyone in here looked at TradeZilla Journal? Never heard of that. Looks very much like a prop firm dashboard, doesn't it? Automated journaling. There's lots of free ones out there. This obviously looks a little bit more in depth. Yeah, never heard of it. TradeZilla. $33. Unless you do it monthly, it's $50 a month. It's a lot of money. Just get Quant Analyzer. It's free. Quant Analyzer's free. There's loads of free journaling tools out there. I can't think of off the top of my head. FX Blue, Forex Factory. There's loads of free stuff out there. But paid stuff obviously tends to be better. Edgewonk, I used Edgewonk for a long time. I used Edgewonk for years. I've still got Edgewonk somewhere. Edgewonk's good. It's not completely automated though. I haven't got it in here. I don't use it anymore. But yeah, Edgewonk is really good. But it's not all, might be automated now. I haven't looked at it for a long time. There's also Excel, as AZ's just pointed out, if you really want to get into it. That's obviously old school manual. Pound US dollar, sell after the 1 hour. Yeah. You could do, if you think this is going to continue this move. So these Aussie dollar, US dollar, obviously, if you're going to take these ADR reversals, any of these ADR reversals, pound US dollar probably trigger in a minute. Wait for the reversal alert. Yeah. And then watch that propulsion move off the news, because if that is going to hold, that's where they're going to add more positions in. Euro US dollar, same. Watch that reversal alert. That's pushing down to 125 ADR now. New Zealand dollar CAD. That's holding. That's obviously not New Zealand US dollar base. New Zealand dollar, US dollar. Chart will update in a minute. But the hourly reversal alert's just triggered on the pound US. But as I said, I'm not convinced. This could easily be a 38 retracement. This, if they V-shape recovery this today, we've got GDP for the pound. No, we haven't had that today. We've got Bailey talking tomorrow. And we've got Michigan tomorrow as well. So if Michigan comes out as negative and Bailey rallies the pound, we'll be back the other way today. The GDP figure was good for the pound. So we've gone into positive territory month on month, and it's as forecast as well. So still bullish pound. So I'm hoping we're going to get a little bit of strength come through on this pound. But obviously the US will trump anything regardless. So afternoon, Mohammed from Amar, even Italy. Afternoon, Joe. AZ, could the Japanese be looking for moves like this to buy a load of yen? Yeah, they will be. They'll be watching this. So you watch the news. If it's got to push, it's got to push further yet. So this US dollar yen, we're coming back up. There you go. So it's come straight off that resistance. Look, we've got to get up to ADR. So, you know, we're going to need an ADR push today. This is what the Japanese are talking about with the volatility. Yeah, they're not what they say. They're not worried about levels. We know they're worried about levels because it doesn't take a rocket science. It's not a coincidence that you bounced it from 150 last year as well. They say they're not interested in levels, they're interested in volatility. But if we have volatility that reaches the level, there's twice the reason to do that, isn't there? So yeah, I don't. We've got to get there first. I'm not convinced the market's got enough faith in the US to rally that far, but we'll see. This is an hour of movement. Yeah, look at we've had many hours of movement where we go for 2 hours and the market goes oh, and they go ah, and then they go oh, and they go ah, and they go oh. Yeah, it's what it does. It just goes up and down all the time. Yeah, A-shape and V-shape recoveries is life. Yeah, they're all over the place. We'll be back down here this afternoon. So it's got to get up there. We're going to need some serious movement, and that is not serious news for the US. That's not seriously good news. We're going to need the Fed to come out and say, you know what? As that inflation figure seems to be stagnating, we're going to put the rates up. Then the US will fly. But they're not saying that. Yeah. What the market is saying is at some point, probably in December, we might have a 50-50 chance of possibly putting the rates up just about by 0.25%. That's not bullish. So we'll see. But yeah, it could get there. If it does, we will see some movement. This is struggling today. Good wicks on the Dow. So buyers trying to take control, unable to. Sellers stomping all over them today. So lots and lots of selling pressure. New Zealand dollar Swiss is still moving. I'm just going to remove TP on these. I'm just going to let the trailer take me out. If we get a big flush, this Swiss franc is getting loaded and the New Zealand dollar is really weak today. So if we get a flush down and then sit around for a bit and then continue a move, a little bit like that. Yeah. We continue to do that. I'm going to try and stay in on the trailer. It's quite tight, the trailer, but I'm going to try and stay on it. If we can get a big drop down to 150, there's no point in taking the TP there if it's going to flush through that propulsion gap. So take the TPs off, but I will be closing that out today as well. Dow's broken through. This is feeling a little bit like the DAX this morning and the fact that we couldn't actually get anywhere. Afternoon, Mac. Afternoon, can't say your name. Sorry. Najoroj. George. You're going to have to spell that one out phonetically for me, I'm afraid. I was just going to say, we just got a flush on the Dow. God, my chart over here moved a lot quicker than that one then. A bit of delayed reaction there. So this level that we're looking at here is a previous weekly high, basically, from last week. That's Monday's high last week, isn't it? So it's not really a very good level. We have kind of mucked about at this level a bit. So we've just taken that out. So there's nothing really to stop us until we get down here now. So yesterday's low is going to be your next stop, I suspect, to the downside on the Dow. So it looks like we're flushing down today nicely. So we should get that target hit. Watching this propulsion gap for a bounce, just in case they do add into positions down there. But looking good. S&P looking good. NASDAQ, if you're in it short, looking good. Bit whippy the NAS though. Again, you know, this is exactly why the stock index hedge EA has this rule in of a minimum maximum range of 10 to 20% of ADR. If that range is too tight and you get normal price action movement, which does go up and down in the candles, obviously, which is what it does, you do get hedged. more often than not, which is why that 10% rule is there. Minimum range 287. We got a minimum range of 249. It's too small, too tight. Got whipsawed. Doesn't always happen, but it, you know, the statistics and the testing I've done has shown it's more often than not. So if it's more often than not, it's better not to. Advantage for each currency pair, which setting and strategy to use, whichever one you want. For each currency pairs, I use the same strategy on and settings on all currency pairs. Everything I do is based on ADR. So it's dynamic. So it doesn't matter which currency pair you look at. New Zealand dollar, Swiss ADR. So I use the same settings on everything. All in the bootcamp. Go and watch the bootcamp if you haven't already. It's on the website. That sounds like another ADR. 125 euro US. Just seeing if this euro's looking a little weak across the board. Australian dollar is looking even weaker. Look at this Aussie. Aussie and New Zealand absolutely getting killed. Specifically the Australian dollar, weak today. Very weak. Typical. I've got a long on against the Swissy. So yeah, euro US dollar 125. So we're coming into this propulsion move here, which we added into last time. Looks like we're probably going to fill that. So that's 2 hours straight down now. Euro US, pound US, the same ADR. So again, coming into propulsion. So looking at these moves, pound US dollar ADR. So this is a 38 retracement. So standard pullback. And we got 50, 60, 18. So 175, 150 to 175 ADR on the pound US dollar today would be a very good potential long-term buy. So market structure now shifted from that hourly reversal alert. We've made a new high. So now we're just pulling back. And if structure is going to continue, we'll obviously just put in a new low, higher low down here somewhere. And then we'll push up for a higher high up into these highs up there. Going in, where are we? Do we use normal DD control on ADR extension strategy? If you're position trading, yes. Cal must have spilled his beer on the laptop, Brian. Yeah. Brian put a very good meme in the. Oh my God, Edgar Scott. I'll be trying to spam crappy signals. Apparently, you should be buying the CAD yen at 109.70. Let's have a look at Mr. Scott's signal, shall we? Oh dear, Mr. Scott. You're buying at 109.70, are you? Okay. Good luck with that. Bye-bye. Let me just... This bloke yesterday... This is the guy that's just been spamming the channel with all these automated signals. There's the same signal by a different person. Now, this is by another guy called Sean Rubenstein. So yeah, I like to have fun with these people. All good fun. Where's my... yeah, there we go. Bye-bye. What was I talking about? It completely put me off. Oh yeah, Brian, your meme. So Brian did a lovely meme yesterday. Brian's really good at his memes. Powell. Pretty good one, that. This was FOMC. I love the way John's put his glasses on, look. Because he obviously can't see the laptop screen properly. Very good. Yeah, so ADR. Basically, it depends how you're trading. Yeah, so we'll have a look at the RSIs in a minute as well. So Aussie dollar, US dollar, right? So if you are taking an ADR reversal here, and you are looking on an ADR reversal to get in and out pretty quick, yeah? If that doesn't work out, are you turning it into a position trade and going to add back in down here? If so, it's a position trade, isn't it? The reason you get into a trade, if you're position trading, the reason you get into a trade is totally irrelevant. You can flip a coin and basically press a button if you want to. You're in a position on a pair in a direction. Yeah. So if that goes against you and it's getting too hot, you do drawdown control. Doesn't matter how you've got in, does it? If you take an H1 M5 mean reversion, an H4 M5 15 mean reversion, if you're using the hedging strategy, if you're using ADR reversal strategy, if you're not using a stop loss and you're position trading out of that position, you use drawdown control. That's what it's there for. You've got to control your drawdown. So it doesn't matter how you get in, you do drawdown control because you're in a position and it's going against you. Aussie dollar CAD ADR. See what oil's up to. So Aussie dollar absolutely getting slaughtered across the board. Biden, I welcome the latest inflation data. I'll continue to fight to build the economy from the middle out and bottom up. How to flip a, oh dear, we haven't gone down into a positive. Well done, Biden. Good job. Yeah, you do need to do ADR. Drawdown control even. I enjoy a nice sell on Aussie dollar CAD and a nice buy on Euro odd. Yeah. Anything you're doing against the Australian dollar at the moment is all good. Coming out to range highs, so just be careful up there. The buyers have not managed to get through that level after multiple attempts, so be aware up there. Good day for the SIHEA. Yeah, not too bad today. Well, we're not out yet. Well, that's close. There you go. So that propulsion gap that I said about, they're adding in from there. That's that accumulation break that started the move yesterday. That was the reversal off of FOMC. Yeah, FOMC. Keep forgetting what day we're on. Closing, just going to close that out there. It's bank to grand. So just covering that position, basically. It's a pretty strong sell, this, if you look at it. So off the back of the US move, since the open, we've basically pushed down pretty much the whole time. At some point, we are going to pull this back. So we're starting to find an area here at yesterday's low where we're going to find limit triggers. So we're going to start running into some pressure down here. But there may well be an overwhelming selling presence today, and this pressure is just not going to do anything. But if it does, I want that profit in the bank. I've got the S&P still on at the minute, but you can see from the S&P, we got two very big rejection wicks coming in here out of this accumulation. So this is where we started the second leg. We might find we get some pressure to buy back from here as well. NASDAQ's gone back out the high. The DAX is rallying as well. I'm just going to close one out on this as well. There's no point. I don't trust this. Closing out and breaking even on that as well. So I'm just banking basically. Got $2,000 banked there, so I just want to protect the capital. This is I didn't cover this in the video. I should have done, but what you see me doing here is a portfolio approach. This is my approach to everything, is a portfolio approach. My goal is to bank money. Yeah. So this morning I had a good morning. When you've had a good trade or a good morning, it immediately puts you on the back foot with everything that you see. You start to question everything that's happening. When you've got profit on the table, you're looking at it thinking, if this comes back up and hedges me, it's a waste of a day because I've already made the money today. So I'm going to bank some. When I see that pushing, and this having buyers coming in, there's just no reason not to get out of that, because there is a high likelihood we're going to start a little bit of a pushback, aren't we? And what I don't want this to be, and what I don't know, is, as I've said, I think we're going to get a V-shaped recovery on this US dollar move. If that's the case, what's the point in getting hedged just to prove myself right? Take the money. Yeah. And although that was only a 1R and I'm looking for a 2R, every day you're going to see stuff and you just think, well, doesn't look right. This morning, this didn't look right, did it, on the DAX? So I got out and I was right. I might have been wrong. And if I was wrong, I would have gone, I was wrong. But it doesn't matter, does it? My job is to bank money. You don't just let an EA run or go for a target just for the sake of, I need to get to a target. You get to where you think price is turning, and it looks like price is wanting to turn, isn't it? So just get out when you get out. There is no way you can set something to go on to full automation and expect it to just work. You've got to look at price. You've got to read the market. You've got to look at levels. Yeah. You've got obvious levels on the chart where price has pushed from. Yeah. When you get to them, it's going to happen again. When we get to here, we're going to find seller pressure. When we're going to get to here, we're going to find selling pressure, because we have selling pressure there last time. It's going to happen again because the banks and institutions place orders at levels and they move up and down between them. So you just got to be able to read it. Sometimes it's the wrong thing to do. Sometimes it's the right thing to do. But at the end of the day, if you've got money on the table, better in your pocket than proving a system or a strategy right or wrong, isn't it? So you just make your decisions as you go. I did cover automated changing levels in the video about the stock index hedge strategy when I did it, but I didn't go into the portfolio approach. And, you know, the decisions you make are going to be based on how that's gone, and how that's gone. Yeah. So, you know, if that has hit target, that has banked loads of money, there's just no point in letting this come back and get you into a hedge, which is just going to make you have trouble for the rest of the session. If you've ticked that and you've ticked that, tick that as well. Because this comes back and you're just going to sit there and go, oh, if only I hadn't have let that hedge me, I would have had a beautiful day. Take the beautiful day when it's approached on the table. Take it. Get out. Be done. Don't be a dick for a tick, as Tom Hugard would say. It's one of my favorite sayings, that. Got in on the Aussie CAD at 87,411. Good job. Netter at Nemesis than I am at dad jokes. Oh, better at memes than I am at dad jokes, probably, yeah. Got 4R locked in on the Dow. Good job. So if you've got 4R locked in, you must have taken the pre-market 15 today, which means you are, yeah, 4R. Nice. Pre-market 15 on the ORB, 4R. That I haven't got. I've got it on Dow, yeah. There you go. So there's your pre-market 15 and your pre-market 5, whichever. It doesn't matter what you took today. If you took any pre-market range on the Dow today, you are loaded. Very nice. And we look like we're continuing to go as well. I don't like the look of this NASDAQ, though. If we were in earnings fortnight, we're not in earnings fortnight yet, I would say that's not a problem. But we're not in earnings fortnight, so there's no reason for the NASDAQ to be rallying independently. We have had some earnings today, haven't we? I saw some fly past earlier. Walgreens profit outlook comes up short. Delta Airlines profits jump. That's S&P. Nothing NASDAQ. There's no news on the NASDAQ, so there's no reason for this to be going nuts, but it is. Okay, out flat on the S&P. I'm going to take that Dow as well. So 2 grand, 600, 600. Call that a day on those. Right, RSIs we haven't looked at yet, have we? There you go. So ADR reversal is starting to kick in on pound US dollar. There's your reversal alert. Kicked in at ADR. Euro US dollar. 125 ADR. That's a propulsion gap fill on the 5 as well. So we're sitting in this propulsion that we supported from last time. So 2 hours of solid buying on the US. So we need to now see what's going to happen. So either we are going to pull back and get added, or we're just going to do a V-shaped recovery and come back to where we were, in which case then we're waiting for the University of Michigan numbers to come out tomorrow afternoon. So good ADR reversals on a lot of these. Aussie US, I suspect, is starting to look like it's ticking up as well. So starting to go, but this might not be over this US move, so don't get too excited. RSIs. So there's a couple of RSIs to look at. The Swiss yen, we looked at this one this morning on the 4. So this was a 4-hour RSI extension above 80 today. So this just about got up there and has dropped back down ever so slightly again. We looked at this as divergence this morning. Or was this? No, it wasn't this one this morning, was it? Something else we looked at this morning for not divergence. But this whole move, difficult to call that the move, because that whole move happened in 2 minutes. So really that, I would say, is the move we're looking for a pullback on. Obviously, if this US dollar continues to rally, this is coming down hard. So this is not a bad short here. I wouldn't mind shorting anything against the yen at the moment. It's not extended on the hourly. I'm not taking any other yen pairs at the moment because I've got the US dollar yen on short at the minute, and I don't want to get overexposed on the yen. But that's still a good short. You've had the reversal alert on it already today, and there's your retest. So there's your M pattern reversal kicking in. So if that's going to continue that structure, we'll be looking for a move down from there. So that's extended on the 4-hour. New Zealand dollar Swiss, we looked at this one this morning as well. Still extended. I'm still in it. Just about. So this is pulling back down into the 72 moving average. So obviously structure shifted on this one. We've just had a reversal alert to the downside. However, we put in a new high. Now we've put in a new low. So we're basically an expanding wedge at the minute. And these are very tricky to trade because they could go either way. This could turn into bearish market structure, or it could carry on that expanding wedge pattern. Just basically means the market is volatile but not directional. So very hard conditions to trade in. But no, I'm short on this one. Obviously, I'm going to get out of it. So this is a good looking potential long little pullback on that move there, but not very extended. You are also extended on the hourly. So if this does continue to drop, and it is just about extended beyond the 75. It's only reading at the moment 25.97. We are down to 24.5. So this hourly candle's still got 44 minutes. So if this ticks back up again, won't get an alert to go long on this one on the EA. But I will be getting out of the shorts. So we'll see. But that's a good ADR reversal. And look at that whole 2-day move we've put in there. That's a big move. ADR is 43. That's 88. So that's basically pretty much 2 ADR. So ADR followed by an ADR. So you'd be looking for a 38 to 50% retracement on that. So good looking little long opportunity if you're not in short on that one. That's New Zealand dollar Swiss. New Zealand dollar CAD is also extended on the hourly down into ADR as well. So you've got a confluence there, RSI extension and an hourly. Have we not had a reverse alert on that yet? Not yet. So I will be getting in long on that in a minute. New Zealand dollar US dollar, ADR obviously. Also on the hourly. Again, this is, someone was asking earlier what strategy I trade. I trade mean reversion, yeah? So mean reversion is basically that, yeah? Reverting to the mean of the move, okay? So it doesn't matter whether you use ADR to get in, whether you use RSI to get in, or whether you just think this has moved down for 3 days solid and get in. Doesn't matter. You're looking for a mean reversion play. You're looking for the market to pull back and profit take that move that they've just created. So the buyers bought for 5 days, sell for 2 days. Back into buy cycle, back into sell cycle, back into buy cycle, back into sell cycle. What we are doing is we are entering on their sell cycles. Yeah. So we're getting in on their profit take moves. So this is pushed down. Nice H1 RSI extension, good opportunity to long it. If that isn't what's happening and we're not doing a profit take and we're going to continue to do that, you just scale in until they do the profit take move, yeah, which they will do at some point 90% of the time. So it just doesn't matter how you get in, but don't take all strategies, yeah. If you're trading H4M5 or H4M15 mean reversion, H1M5 mean reversion, and ADR reversals, look at this chart. You're getting in on an hourly RSI extension. You're getting in on an ADR reversal. This one isn't there yet, but if this was down here, 30, you'd also be getting in on an H4 M15 entry. Yeah. So the strategies that I have on the bootcamp and in the course on the website, which you can go and watch anytime you like for free, all of that is ways to get into the market. They're all very similar. When you get an ADR hit, you're going to get an RSI hit. Why? Because to hit ADR, the price has to move beyond its normal daily range within a day. That means there is a lot of strength in the move. This indicator measures the relative strength. So you're going to get RSI alerts at the same time as you get ADR alerts, probably 60, 70% of the time. So just pick one or the other. Personally, I prefer RSI, and that's why I trade H1 M5 mean reversion off of RSI, because 1 day down in ADR doesn't mean that it's going to pull back. Multiple days of movement, which takes the RSI to an extended condition, is more likely to cause a pullback. Yeah. So you can have something that hits ADR and then basically does that and continues to move down. When it hits ADR, as you can see in this case, it doesn't mean it's going to get extended on the RSI. It's got loads of room to go down. So this thing could do that. Then it will get hit on RSI. That's when I'll get in, after it's had multiple days of movement. Yeah. But I will miss a load of those. You get loads of ADR hits which just work and you're out, or work, take a second and you're out. So take one strategy or the other. Don't trade all of them, because you'll find that you're just duplicating all of your trades. So that's New Zealand dollar, US dollar, New Zealand dollar, Swiss, New Zealand dollar, CAD, all nicely extended. Reverse alerts just kicked in on New Zealand dollar, CAD. No, it hasn't yet. Will be shortly. Pound New Zealand is also extended to the upside. Obviously, New Zealand dollar and Aussie dollar having a really bad day. So pound taking full advantage of that. We ain't going anywhere though, are we? At the moment, we're 2 weeks sideways. This is week 3. So no directional bias really on this for the last few weeks, but it is obviously bearish at the moment. However, we've just had positive GDP figures for the pound. We've got Bailey speaking tomorrow. He might rally the market. And this New Zealand dollar and Aussie dollar, for some reason, are just falling out of bed. Don't know why, but it's extended to the upside on the 4 hour. So you've only just kind of got an extension there. Sorry, it's on the hourly, not on the 4 hourly. So this is looking like it might get a further extension, in which case then I will be getting in short on this, which is a nice entry there. If that doesn't work, we'll be looking for this accumulation here to give us a second entry. So if it pushes up, does that, and then pushes up into there, we've got that entire move to do a profit take on. Back down into this area here before it bounces back off. So if I get in here and I get in there, my average will be there and I can get out there. Euro New Zealand, same trade as the pound New Zealand. This is rallying against New Zealand dollar. We've got a lot further to go on this one. Extended to the upside. Got out the longs on this one yesterday, too early. If we can get up to there, fantastic. But, you know, you can see what this one's doing. But really, I've got no bias on this new euro at all at the moment. I keep expecting Lagarde to rally this, and she's not doing it. So we're not getting any real bullish movement out of the euro across the board. Everything euro-wise is just looking a little bit weak and feeble at the moment. So it's not holding up against anything at all. So I have no problem really taking this in any direction at the moment. As long as it's moving, I'll get in. So Euro New Zealand's extended to the upside. I need it a little bit more before I take a short on that one, though. Swiss yen we've looked at. Aussie Swiss and Aussie CAD. So these two are your RSI extensions. Oh, no, that's not extended on RSI. Aussie CAD is extended on RSI. ADR, sorry. Get your words right. So that's an ADR reversal. Pushing, just take a quick half ADR trade back up into there. That is also extended on the hourly. I need it a little bit further for me to get interested in it. A la over the 75 level, 25 level. And Aussie dollar Swiss extended to the downside. Already long on this one. So I got in long on this one initially on that H1M5 entry there. We went absolutely nowhere for 6 and a bit days. So second entry taken today, and we are still collapsing out of bed. Aussie and the Swiss. Sorry, Aussie and the New Zealand. So looking at this one from a support perspective, moving down, we've got this area coming up here, which forms part of that range. So ADR basically for potentially another bounce, which is at 27. It's not going to be close. That's too close for me to get into a third position. But that is where I would expect potentially us to get a bounce from, somewhere around here today. There we go. So there's your RSIs. Covered those. ADRs are done. Euro US dollar is the best ADR so far today. That's bouncing nicely off of 125. So right choice at the moment to get out of these, it seems. But we might just, you know, we haven't gone very far on this Dow, so this could have some more downside in it, but we'll see. If this US dollar V-shaped recovery goes in today, obviously all these indices will do the same. We'll see where we go with those. US dollar yen, I've already done that one. Well, I did it earlier on, but so we're pushing back up. So we've broken out that high now. We're coming up to gap fill. So if this continues to rally, they'll be pushing. They'll be pushing that yen back down again. So we'll see. But yeah, short on that one at the moment. I wouldn't want to be long on anything against the yen at the minute, unless you're getting in really short term. If you're getting in for a day with a stop loss, fine. But I wouldn't try and take any positions on the yen long because we're too close to intervention levels for a long. Yeah, these are the interventions from last year. Yeah, these are the interventions so far this year. We don't want to be that one. Sorry, that actually wasn't an intervention. That's not strictly true. That was a threatened intervention. They threatened us there, and the market reacted. So we then pushed up. That was the first intervention we've had. So Same levels as before, same threats as before. This time they followed through. We push up again and try and break that level. They'll hit it. So if you're going to get in long, you need to be aware that they will just suddenly do it. Yeah. So just keep your eyes on financial juice. If it's going to happen, they'll tell us. Yeah. Then the Japanese are very good at telling us not to do something, and then we ignore them for a bit, and then they say, seriously, stop it. And then we ignore them for a bit more, and then they just go, we told you so. And then the banks and institutions go, ah, crap. And then they do as they're told. Japanese are one of the very few countries in the world that actually have the power to do that. And this is the level they choose to do it at. Matej, if you trade prop firms, are you not breaching daily drawdown? I don't trade prop firms. Not with position trading. No, don't position trade on prop. No. Opening range breakout EA and the opening range breakout strategy, this one, or the stock index hedge strategy, this one, absolutely fine for prop because you're limiting your risk. We're either using a stop loss or we're hedging the position to control risk. Position trading, you enter with small positions long term, so you're not. I mean, you will or won't hit drawdown limits. It all depends on how the month goes, doesn't it? I mean, at the moment, I'm not. You know, I've done 10% this month so far. We're only on the 12th. And I'm in 3.5% of drawdown. I'm fine. If I'm in 5.5% of drawdown tomorrow, yes, we'll have blown a prop. But then again, this isn't a prop strategy. This is a proper strategy. Prop's all about making money. Yeah, prop's all about you paying for a demo account, them using all of that money to pay people who are lucky enough to actually get through a demo account, to another demo account, to another demo account that they call a funded account, and hold on to that long enough to get to the payday, which is usually 2 weeks, which is about as long as it's taken you to get through both of the previous stages. So if you're lucky enough to have a 6-week run where you don't have any drawdown on your account, they'll pay you some of the money that all the other mugs have paid them. That's prop. So yeah, you'll find very few professional traders use it because you can't live like that. You can't live within drawdown rules. If the market wants to rally this US dollar yen for the next 2 weeks, it will. Yeah, I can't control this. It's not in my control. The market knows this. The prop firms know this. Therefore, they put limits on your accounts that they know proper traders will not stay within because you can't. Yeah, you will not have, even if you're using a stop loss, it doesn't matter, does it? If you're using a stop loss and you have a strategy with a 50% strike rate, yeah, and you take 100 trades on your account, if you've got a 50% strike rate, you're going to have 50 losing trades. If you risk 1% on each of those trades, if you get 10 losing trades in a row, which you will regularly, you've blown your prop account. They know that, you know that, everybody knows that, yet you still go and do it. If you use 0.5% risk, they go, okay, chances of 20 trades in a row, a lot less likely to happen. It might do, but it's a lot less likely to happen. But they also know that if you have 10 trades in a row and you're down 5% on your account, you're going to get crossed, double the lot size, and then you're going to have 3 losing trades, which is going to blow your account. Yeah. If you trade 0.25% risk on each trade, you're not really ever going to hit the drawdown limit. You're probably going to flip-flop around and do that. But after 6 weeks, you'll be going, Jesus, I'm never going to hit target. So you'll up your risk, and then you'll get a losing run, and then you'll blow your account. And all they do is they keep you in this cycle of buying demos. And you've got to do it twice, don't forget. With 90% of prop firms, it's a 2-stage thing. So if you do get past the first one, you've got to get past the second. If you do get past the second one, you're panicking by the time you get to the third because you've had such a lucky run in your strategy. You know you've got a losing streak coming. Breakout for the indices looking interesting. Are you live every week? I'm live every day, twice a day. Yeah. Go to YouTube. Subscribe. Well, you're on YouTube, obviously, but look at the live rooms. Yeah, this is twice a day, every day, has been for years. And years. And years. And years. And years. And years. And then I changed my light on my little screen there. And more years. And more years. More years. More years. Sorry. Sell on the US dollar yen if you want to. I would wait for a reversal alert though. Don't just get in because it's going up. Get in when it's coming down. So we've got another potential resistance coming up here. So we've got this high, which they came and retested, which we broke through on the intervention. So we're retesting that level now. So if they fill this propulsion gap at some point overnight, tomorrow morning, come back. Who wants to put a wager on it? I'm not going to do that. But I would bet you money that tomorrow morning, log this, 3:30 this afternoon, I said this. Tomorrow morning when we come on, I will go through the news in the morning and there will be a message from Japan overnight saying we are closely monitoring FX movements. Highly volatile FX movements are undesirable. What else might they say? They probably will say something around the region of we will not intervene in the markets, but if movements continue, we will be closely watching you, or something along those lines. Yeah. So tomorrow morning's live stream, that's what we're going to find in the news. And it'll be almost like I time traveled and came back and had seen it. You watch. Because they are not going to be happy about this. Aussie US 125. ADR. More extensions going in. US dollar Swiss ADR. Still pushing it. Spoke to 8cap prop white label. 97% of people fail, with South Africa being one of the highest challenge buyers. Yeah. Almost all prop firms don't copy traders. It's all from payouts. Yeah. This is nothing we didn't know, Paolo. That's the business model. Yeah. My Forex funds made $300 million selling people demo accounts. Some point it was going to fall over, wasn't it? So there won't be the last. There'll be investigations all over the place when the CFTC find against them and the Fed get involved. All the prop firms will suddenly have knocks on the door. They'll all be disappearing very quickly. But the ones that change their business model to funding, you will find, I think what you're going to find is going to happen in the industry is the prop model will still be there. The prop model's been there for decades. Yeah. Prop has been around a long time. In its normal form, you pay for a desk and you pay thousands of pounds a month to have a desk to access 10, 15 grand's worth of revenue that you can use to prove to the company that you can trade, and then they will give you more. They will give you more. And as soon as you get to a point where you're not doing very well, they'll say, screw your £2,000 a month for the desk. This guy's doing better. He's got your desk, and they'll kick you out. That's typical prop model. Prop firms are there, and if you don't make them money, they don't want you. Yeah, they don't set you ridiculous rules that you can't trade within because they know how to trade. What you'll find is the prop firms that are left out there, possibly people like FTMO and things like that, the bigger ones, will change their model. They'll have to use segregated accounts for funds, and they will have to copy trade or fund you, because that is the only way they're going to please the local regulators, whether it be the CFTC, the FCA, or whoever it may be. So all the others will fall by the wayside. You'll be left with a few. The rules will suddenly change dramatically. They will become more expensive. because they will want to limit entry to only people with money, because the people with money are the people that are probably making the money. They're the traders that are successful. They don't want the crap, basically. So I think that's probably what's going to happen. How long it will take, I don't know. Could be weeks, could be days, could be months, could be a year or so. Depends how long this CFTC investigation into my Forex funds lasts. But they're gone. So, you know, it's not going to be the first. It won't be the last. Well, it is the first, but it won't be the last. So if you want to make money out of prop, get in fast. I'm personally not touching it anymore because I'm owed money by my Forex funds and I'm just going to wait for the payout. So, using my own capital. It's safer. I wasted £1,200 over 6 months with my Forex funds, and when I got to phase 2, they went bust. Yeah, sorry, I'm not laughing at you. I'm just laughing at the situation. You couldn't make it up, could you? It's just one of those things. They owe me money, but I had money out of them, so I'm all right. I made money, but they owe me money, you know. So it's just one of those things. But you'll be able to get that back hopefully when the class action lawsuits start. So when my Forex funds get found guilty officially by the Fed, the lawyers will be on top of them, sharpish. Whether there's any money to get, don't know. But if you get 10 cents, 20 cents in the dollar back, you get something back. But can I spare you $1,200? No, sorry, pounds, no. We'll see. Jimmy, can I use the SIH EA on demo first and then live? Yeah. You don't have to. No. So anything you buy from the marketplace on MQL5, you buy it and it's yours. Yeah. You get 10 licenses. A license is a PC. Yeah. So you get 10 licenses in total. Yeah. And as soon as you download and install it, you use one license on whatever PC you're using. Yeah. If you have a VPS and you install it on that VPS, that's 2 licenses. So you're down to 8. If you've got a laptop, that's another license. So you're down to 7. If you've got a tablet you go on holiday with, that's 1 license. You're down to 6. The only way you're ever going to use 10 licenses in your lifetime is if you reinstall Windows every couple of months, which some people for some reason do. And I get the feeling it's the South Africans, not being horrible to anybody South African, but they tend to not want to buy stuff and get stuff done on the cheap. So what they tend to do is get a demo of Windows, which lasts for 2 months, and then it shuts off, and then they reinstall it and get a new one. Every time you reinstall Windows, that's a new license because the licensing system works on your PC and your Windows installation, and it creates a special code based on the hardware and software combo, which creates a license. So every now and again, I get someone go, I've used all my licenses. And I'm like, how the hell have you used 10 PCs with one product to trade in 6 weeks? And it's always, oh, I've reinstalled Windows 3 times. But don't do it. Buy Windows. But that's how it works. So yeah, you can use it on as many brokers as you like and as many accounts as you like, everything from the marketplace. That's it. I mean, I've bought stuff from the marketplace years ago. I've had probably 3 PCs in the last decade, maybe 4, and a couple of laptops. So worst case scenario, I'd only ever use like 5 or 6 licenses, including VPSs. You just won't use them. But they do, some people. EMAC, they may do it today, pushing. Unlikely. They won't do it without warning. And I don't think they will do it before we get there. Famous last words. We will need to breach that before the Japanese will start talking. What's the other yen pairs doing? Aussie's coming down against the yen. CAD yen's going nowhere. Swiss yen is going nowhere. Euro yen, pound yen. See, this is no. This is all US. Yeah, the yen is just sitting there silent. And this is what they're worried about, the US rallying. That's when they'll do it. We'll see. So I'm going to go into drawdown on this for a bit. And they may need to breach that level, yeah? So this 52 I've got on the chart here, that's the last intervention level. This is where they called it. They said here, do not go beyond. Market went, all right, we'll test it, we'll test it, we'll test it. It got all the way up to 152 before they did the big one. That was 6 ADR, and then we dropped for 2 to 3 months, I think it was. I think it's about 3 months drop. So the intervention happened on 24th of October. We bottomed out 16th of January, October, November, December, 4 months of solid. No, you can't. I'm not saying we're necessarily going to get that, but the first intervention will be 600% of ADR. So you'll be back down to here in literally 2 hours when it happens. So I shall scale in until it does. Yeah, and I don't know how long it'll take. But like you say, it could happen this afternoon. This last one, we were in the live room, and I said, this is rallying. This could go any time. And then we went off and we started looking at other stuff. And then all of a sudden chat went mental. And they're like, look at the US dollar yen, look at US dollar yen. By the time I'd seen it in the chat and looked at it, we were down here. We were at the bottom. 2 minutes, that entire move, 4 ADR in 2 minutes. And then they said it's not an intervention. It's like, what is it then? Someone spill their coffee over the sell button. It's an intervention. Doesn't move like that for no reason at all. That is the Japanese poking. Got to use my laptop, so only 1 license required. Yeah, so if you've only got 1 computer, Jimmy, you'll only ever use 1 license. But most people have a VPS or a couple of VPSs. So your VPS will be a license as well if you've got a VPS. But if you're using the stock index hedge EA, this, I mean, I don't have this running on a VPS. I don't have the opening range breakout running. I don't have this running on a VPS. Don't need to. Because you're only trading from here. I mean, an hour and a half is typically a trade. Sometimes it might go on for 3 or 4 hours if it's a particularly long session, but you don't need to run this on a VPS. If you're going out and you can't be there for it, just stick your laptop on and let it go. You don't need to put it on a VPS. VPS is just an expense. Market reversal alerts, yeah, you do need that on a VPS because that has to run 24/7 because it's managing positions over a long period of time. Are the tools on the ATR indicator everything? Or is it still possible to add some? I'm not sure what you mean. This is the ADR dashboard. This is the ADR indicator. So the indicator paints on your chart. The dashboard alerts you. This also alerts you, but it only alerts you on the instrument you're watching. Yeah. Oh, can I add more instruments? Oh, to this, you mean? Yeah. No, all the dashboards, RSI dash, ADR dash, market reversal alerts dash, all of these, you can put whatever you like on it. Yeah. So if you go into the indicator settings, there's a pairs list. You just add everything you want in here. You can add anything you want in there within a limit. So there is a character limit on this field. So if you want to monitor like 60 instruments or something silly, I mean, you wouldn't, because there's only 28 FX pairs. And if you want to use the exotics, there's only 38. If you want to use exotics, then yes. But if you want to run more than the character limit in that field, which I think is 64 characters, 256 characters. I can't remember what the limit is, but whatever the limit is, if you get to the end and all of a sudden it cuts off, you know you've hit the limit. So just run 2 dashboards. But you shouldn't need to. 125 ADR, New Zealand dollar US, Euro New Zealand ADR as well. Loads going on today, look. New Zealand dollar still collapsing. So Aussie US, Euro US, and New Zealand US See, when you look at these moves, yeah, we're getting, it looks like it's a big move, doesn't it? But bear in mind, we're on contracted ADRs at the moment. Yeah, the market is contracted. We're only getting 125 ADR. So yes, this is a slightly bigger, it's 25% larger move than we normally get. But in the grand scheme of things, if this was a big fundamental shift, we'd be looking at 225 ADRs plus, wouldn't we? Because we've got contracted ADRs at the moment. We're normally looking at pound New Zealand being in the region of 300 ADR. It's sitting at 145. It's half the normal size. So although these look like big, strong moves, yeah, that looked like a big, strong move. Yeah, 50% of that will be undone. If not all of it will be undone at some point in the next 24 hours. So just have to wait. Pound US dollars holding up well. Look, ADR we've hit. We've not got any further than ADR on that one. Euro's weak at the minute. It's 125, but it's all coming to a little bit of a slowdown. Bank of Japan having Gandalf protecting that level. Yeah, you shall not pass. Yeah, This is, as I said this before, this is where it becomes uneconomical for the Japanese to trade. So they have to stop. They have to do something because they can't sell their stuff to the US if it makes them less money than it costs to produce. They have to have the price down. They can't sustain. But you know, we've said a lot of things in the past that this can't happen, that can't happen. This market has a uncanny habit of going, yeah, it can. And it does. So, you know, economics change. Don't forget, there's things that can shift, right? So if you look at the, when's the next interest rate for Japan? We had one 2 weeks ago, didn't we? CPI. It was somewhere in here. When was the Japanese interest rate? There it is there. Yeah. So, you know, this negative 0.1, right? So I'm saying things like they won't go beyond that level because they can't, they don't, and it just doesn't work for them from a financial and economic point of view. However, they've had their interest rates at negative 0.1 for 6 years. Yeah. Yeah. Negative 0.1 hasn't changed. 6 years. So there are things they can do. They could make that a +1 or a plus 0.1 even. Plus anything, a 0. That's going to upset the apple cart and drive money into the yen. Yeah. So there are other things. They've got other tools in their toolbox apart from intervention. Intervention is the fast, easy route. This is the long-term route, but this has massive economic impact across all sorts of things in Japan, which is why they don't change it. They do not use, they're one of the only countries that does not use interest rates as a mechanism to control inflation and unemployment. They do it different. Yeah, everybody else is focused on inflation, unemployment, and GDP. Yeah, this is a byproduct of how that is going, and that is controlled with that. Yeah, this is how the entire world works, apart from these guys. So there is other things they can do. It's just that they don't usually let it. So, you know, it's not by any means a given, but I've never not seen it happen. But then again, I've never seen a pandemic, and I've never seen a war break out in Europe. They both happened in the last 3 years. Yeah, so, you know, it's nothing is certain, but certain things are highly likely. That's all I would say. Right, that's all I've got for you today. So we'll watch these US moves. They look like they're still carrying on, although a little bit weaker in the last hour. So although the US pound US still seems to be going like a loony at the minute, but so just watch these for undoings. But we will keep an eye on the news overnight. We'll see if the Fed come out and say anything. There's nothing coming out from anywhere at the moment about any of it. So we'll have to wait and see what happens tomorrow. Tomorrow we've got Bailey speaking at 9 o'clock. We've got University of Michigan in the afternoon. We've got Lagarde speaking. We've got Harker speaking. So there's 3 talking heads happening tomorrow and University of Michigan. So obviously there's many opportunities for a lot of these currencies to be undone tomorrow and be moved around. We've got the CPI figures for China coming out. Doesn't tend to really affect anything, the yuan, but highly unlikely. We just don't really get any movement off that. So yeah, we'll wait and see what happens tomorrow morning, especially with the pound. I'm looking for Bailey to be bullish tomorrow. We need some guidance on interest rates. I'm not expecting them from Harker, but maybe from Lagarde as well. So we could have some decent moves on the euro and the pound, hopefully. But if you're still in these indices short and you're still holding them, might get a continuation. But obviously they're holding against the US dollar at the minute. So as soon as that US dollar turns tail, and if we do get a pullback started on it today, these things will be back up here. So just be aware of that if you are still short. Watch the US dollar. If you see the US dollar weakening, these are going to just pop back up again. We are looking for bullish movement on these indices. So, but good day on the opening range breaks today. Much better than yesterday. So yesterday was a bit of a pig, 0.87% loss, but so far this month doing very well. All the breaks nice and clean. Oh, this is really coming down. Little bit of weakness showing on the pound, not against the Aussie and New Zealand, but against everything else. The pound's having a little bit of a weak run. So obviously with this massive US rally we got going on and a little bit of weakness in the pound, we're getting a big move on this. Everything else is kind of holding up at the moment. Would be the one that I'm in, wouldn't it? So I will be adding another position onto this today. So ADR on this is 99. We're at 100 where we are. So I will be adding the next long on this as soon as we get a reversal alert. Did down to position there for some reason. Oh, big move there. So I just measure this. 71, that was just inside. 99 is ADR. Let me just quickly measure this. I'm using 0.75 of the ADR. 75%. 74. So I need a minimum of 74 pips between entries. That was 71. So there was a reversal alert here, look. So that candle there, that was a reversal alert. So that would have been drawn in there. But that was 3 pips shy of my entry. So this one, as soon as we get any kind of pullback, I will be entering another position long on this. And obviously looking to get that average back down from 175 back down to about 125 ADR, and then looking for a continuation move on that hopefully tomorrow or whenever. Fingers crossed Bailey's bullish tomorrow. We'll see. Right, I'll leave it there. Anything else you need, let me know. I'll be in Telegram. Back tomorrow morning, 7:50, same time, and back tomorrow afternoon at 2:20 for the US session as usual. We'll trade the DAX tomorrow morning, US indices in the afternoon. And obviously we'll see how we go with the US. Stay tuned to Financial Juice. If you get any, it is not unusual for Suzuki to come out and say, not the bike manufacturer, the guy in charge of finance in Japan, Suzuki, not the bike, for him to come out and say stuff in the middle of the night as it is in Japan. Yeah, so we could well have a bit of red news pop in here where he's saying, we're keeping an eye on this move. Yeah, and that's quite often enough for the market to go, yeah, right, sorry, and pull back. So just keep your eyes peeled because you might find that that's what causes a recovery to start. But we should have something overnight. I'll be very surprised if there's nothing overnight from Japan. So I shall be gloating tomorrow morning in the Frankfurt session when I read out the news from Japan overnight. Right. Can you check Euro Pound? I'll quickly check that before I go. I'm trying to go. Got spin class to get to. I can check Euro Pound. I don't know what you want me to say about it, though. Pound is very weak. Pushing up. This is flatline, look. Yeah, I haven't taken a trade on this forever. Yeah. It just has not had any strength of movement. There was one entry, possibly. I didn't take it, but you might have got in on that. Other than that, this thing has just been grinding. There's no reason to get into it. If you watch the bootcamp, you'll see how I trade, why I trade. There's no signals at all on this pair. US dollar CAD, Euro pound, Aussie dollar, New Zealand dollar, and Euro Swiss are the 4 pairs which move very much on each other's news because these are close trade partners. Yeah. So what happens in one affects the other. So when you get a large move on one instrument, the other one will tend to run with it. Yeah. Which is why you tend to, on these, get very low ADRs and a lot of sideways movement. Because when the euro rallies, the pound rallies. When the pound rallies, the euro rallies, and vice versa. If you look at the US dollar CAD today, that one actually, we've got oil weakness, haven't we? So we've got a weak oil at the moment, so that's why that one's made a move today. But normally you would find on a US dollar rally, we'll get sideways movement. But this is obviously moving today. But you know, as you can see, this hasn't hit ADR yet. All the other US dollar pairs have hit ADR. This one hasn't because it will move along with it. So it weakens the other's movement. So don't forget, there's 2 things moving, the US dollar and the Canadian dollar. If they both go in the same direction at the same time, neither of them move. If one goes up and one goes down, you get a massive move, a la pound US dollar, euro US dollar. That's why you get ADR extensions. Okay, there you go. So there's euro US dollar, euro pound, nothing moving. All right, so have a good one. I'll be back tomorrow. Anything you need, let me know. Otherwise, see you in the morning or tomorrow afternoon. Have a good evening.